Welcome to this explainer. Today, we're unpacking something truly fascinating, the latest CrowdStrike earnings report. If you've been keeping an eye on the markets, you absolutely saw that massive 11 to 12% pop in CrowdStrike stock right after their numbers dropped. I mean, it was a huge move. And it tells a really compelling story, not just about one company, but about the rapidly shifting landscape of enterprise security and AI. We're going to look right at the data, the technicals, and the executive statements that actually drove this surge.
Okay, let's dive into this. Here is our roadmap for today. First, we'll hit the earnings surprise itself, then explore the AI security catalyst driving it all. After that, we'll break down the crucial SaaS metrics, look at the market reaction and technicals, and finally, wrap up with Wall Street's outlook.
Section 1, the earnings surprise. And trust me, it was a very high bar for CrowdStrike. Going into this release, expectations were seriously demanding. The stock was already up over 60% year-to-date, so the market was basically demanding perfection. Did they deliver? While looking at the bottom line, CrowdStrike reported an earnings per share of 31 cents. That cleanly beat the Wall Street estimate of 29 cents. In a highly scrutinized growth story like this one, literally every single penny on the bottom line matters. This beat signaled to everyone that they aren't just growing, they're actually doing it profitably. And that strength? It carried right over to the top line. Revenue came in at a massive $1.47 billion, easily topping the expected $1.44 billion, generating nearly $1.5 billion in a single quarter, and beating analyst targets while doing it, proves that customer demand is still exceptionally strong, even when the broader macroeconomic environment feels a bit cautious. Section 2, the AI security catalyst, or what we're calling the Mythos moment. To really understand this beat, we have to look past the raw numbers. We're currently in what's being called a Mythos moment for cyber defense. AI threats are the biggest growth driver since the shift to cloud computing. To grasp the sheer scale here, just listen to CEO Kurtz. He explicitly called this the largest market opportunity in the company's history. He also emphasized the urgent focus on securing AI at the endpoint. Think about that for a second. As every enterprise on the planet rushes to adopt AI, they're simultaneously creating new, incredibly complex vulnerabilities. CrowdStrike is positioning itself as the absolutely critical shield for this new AI-driven landscape. Section 3, crucial SaaS metrics. Let's look under the hood. Now, what's really interesting about this is what the data tells us about the core business. When we evaluate a SaaS company, annual recurring revenue, or ARR, is the true north. It strips away all the noise of one-time hardware sales and shows us the raw, compounding power of their software subscriptions. It's essentially the lifeblood of the company. So looking at the numbers, CrowdStrike's ARR hit a staggering $5.84 billion. That is a 25% year-over-year growth rate. For a company to grow its recurring revenue base by a quarter at this sheer scale, it's phenomenal. Plus, the report noted record net new ARR. That means the volume of brand new subscription dollars added to the pile during the quarter broke all previous records. And if you want to know exactly where that massive growth is coming from, look at the Falcon Flex platform. This specific product suite alone crossed $2 billion in ARR, and it's growing at nearly 100% year over year. This proves a really vital narrative in cybersecurity. Platform consolidation is actually happening. Instead of buying 10 different security tools from 10 different vendors, massive enterprises are consolidating their entire security spend onto comprehensive platforms like Falcon Flex. Section 4, market reaction and technicals. It's a real tug of war. Up to this point, the fundamentals look pretty much flawless, right? But the stock market is rarely that simple. With numbers this undeniably good, why did the stock experience so much extreme volatility right after the release? Why wasn't it just a straight rocket ship up? Well, to figure that out, we have to look at the intense tug of war between business momentum and market valuation. The answer lies heavily in one specific metric, a forward price-to-earnings ratio of around 140x. At that multiple, a stock is literally priced for perfection, and maybe a little divine intervention on top of that. Investors are paying a massive premium today for earnings they expect years down the line. So even a fantastic beat and raise might not initially satisfy those sky-high hopes, which leads exactly to that immediate post-earnings turbulence we saw. And the technicals perfectly reflected this tension. Going into earnings, the stock was technically oversold, with momentum indicators like the Stochk RSI hitting zero. This created a classic coiled spring dynamic, but the trend timelines were completely clashing. The short-term daily trend was bearish, pointing downward, while the long-term weekly trend remained strong buy.
Caught right in the middle was a crucial technical pivot point, acting as support at $179. So that 11 to 12% pop we saw, that was the coiled spring finally releasing off that support level as the incredibly strong fundamental news overpowered the short-term bearishness.
Section 5, Wall Street's Outlook, the final verdict.
Now that the dust has settled, how are the professionals actually digesting all these metrics? Well, the consensus remains very positive. Most firms are keeping their buy ratings, with price targets generally clumping in the $210 to $250 range. That implies some really solid upside from here. We specifically saw firms like TD Cowen raise their target to $235. Their rationale? They're seeing enterprise conversations aggressively shifting towards securing AI adoption, and CrowdStrike is positioned right at the center of those budget discussions.
And this brilliantly illustrates the big dividing line in the market right now. On one side, the bulls see this AI security wave not just as a passing trend, but as a massive, multi-year tailwind that will easily sustain high growth. On the flip side, the bears aren't necessarily saying CrowdStrike is a bad company. They're just arguing that a 140x forward PE valuation is simply too rich, even for a growth rate of 25%. It's a classic textbook battle, growth momentum versus value gravity.
So what's the final verdict when we put all this data together? The core takeaway is that CrowdStrike's long-term thesis is fully intact. The shift to AI security is incredibly real, the ARR growth is monstrous, and platform consolidation is definitively happening. However, because of that extreme valuation, the market is going to demand spectacular execution. Just being good is not going to cut it anymore. They have to continually outpace these incredibly demanding expectations quarter after quarter. So I want to leave you with this final provocative thought to chew on. We've seen the flawless fundamentals, we've explored the massive AI catalyst, and we've acknowledged the very hefty price tag. The real question going forward is this: is CrowdStrike's AI momentum strong enough to continuously defy its 140x valuation gravity? It's a fascinating balancing act of hype, execution, and pure financial fundamentals. Thank you so much for joining me for this explainer, and keep exploring the data.